XRP has long been overshadowed by Bitcoin and Ethereum, but that's changing fast. Once seen as an underdog in the crypto world, XRP is now stepping into the spotlight as the landscape evolves. Major financial institutions are now eyeing XRP, especially after recent legal clarity and a maturing market. Regulatory wins have given XRP a legitimacy boost, making it more attractive to banks, asset managers, and hedge funds looking for the next big opportunity. With Bitcoin ETFs now mainstream, big money is searching for the next regulated high-potential asset. XRP is emerging as a top contender. The appetite for crypto exposure is growing, and institutions want assets with both upside and regulatory clarity. This shift could transform XRP from a speculative bet into a core portfolio asset. As more funds and investment products include XRP, its role in diversified portfolios could become as significant as Bitcoin or Ethereum. But institutional entry also changes the game. New strategies, new risks, and new opportunities. The influx of professional investors brings sophisticated risk management and a focus on long-term value, not just short-term speculation. At Crypto Insider, we're tracking the data, large-scale wallet growth, new investment product filings, and more. We're seeing a clear uptick in institutional-grade wallets and filings for XRP-based investment vehicles. The evidence points to a new chapter for XRP, driven by institutional adoption. This could mark a turning point as XRP gains traction among the world's largest investors. In this analysis, we'll separate hype from hard data and show you what's really fueling XRP's surge. We'll dig into the numbers, the trends, and the real-world moves behind the headlines. By the end, you'll understand the forces shaping XRP's rise, the implications for institutional investors, and what it could mean for the broader crypto ecosystem as a whole. Before zeroing in on XRP, let's take a step back and examine the broader landscape, specifically the growing trend of institutional accumulation in the crypto space. Over the past year, we've seen a dramatic shift in how major financial players approach digital assets. No longer are cryptocurrencies just the domain of retail traders or tech enthusiasts. Now, some of the world's largest investment firms and hedge funds are making significant moves into the market. The number of large Bitcoin wallets, so-called whale wallets, is rising, signaling that institutions are building long-term positions. These wallets, each holding thousands of Bitcoin, are a clear indicator that big money is flowing into the space. And these investors are not just looking for quick profits, they're planning for the future. This isn't just about a few wealthy investors, it's a sign that crypto is being embraced as a legitimate asset class. The presence of institutional capital brings a new level of credibility and attention to the market, encouraging more traditional investors to take a closer look at digital assets. When institutions buy, it boosts confidence and stability across the market, paving the way for other assets like XRP. Their involvement often leads to increased liquidity, tighter spreads, and a more mature trading environment, which benefits everyone involved. It's like a major developer investing in a neighborhood. Suddenly, everyone pays attention. The influx of capital and resources can transform the entire landscape, attracting new participants and driving further growth. But there's a flip side. Markets dominated by whales can be more volatile if they move in sync. Large, coordinated moves by these big players can cause sharp price swings, making the market unpredictable at times. That's why tracking wallet behavior is crucial. Steady accumulation signals conviction, while big sudden moves may mean speculation. By analyzing on-chain data, we can get a sense of whether these investors are here for the long haul or just chasing short-term gains. Right now, the data shows patient, strategic buying, a bullish sign for crypto's maturity. This kind of disciplined investment approach suggests that the market is evolving, with more sophisticated players shaping its future. This rising tide is lifting all boats, and XRP is well positioned to benefit. As institutional interest grows, it's not just Bitcoin that stands to gain. Altcoins like XRP are also catching the attention of serious investors. So, how is this trend playing out for XRP specifically? Let's dive in and see what the data reveals about XRP's place in this new era of institutional crypto investment. XRP has staged a remarkable comeback, defying the odds and surprising even the most seasoned market watchers. After a long period of turbulence and uncertainty, the token is once again making headlines for all the right reasons. For years, XRP was clouded by legal battles and regulatory ambiguity, leaving investors and the broader crypto community in suspense, waiting for clarity. Its recent rally isn't random, it's the result of long-awaited regulatory clarity and a surge of renewed institutional interest as major players now feel confident to re-enter the market. Imagine XRP as a promising startup finally freed from a lawsuit. Once the legal risk disappears, investors who were previously on the sidelines are eager to jump in and seize new opportunities. The resolution of these legal issues has unleashed a wave of pent-up demand and restored confidence, allowing the project to move forward with renewed momentum. XRP's resilience is truly remarkable. While many projects might have faded away under such pressure, its strong community support and real-world use case have kept it not just alive, but thriving. Now both loyal holders who weathered the storm and a wave of new investors are fueling its impressive ascent, creating a unique blend of optimism and experience. This isn't just hype or speculation, it's a rally built on solid fundamentals, fresh capital, and a belief in XRP's future potential. Of course, no rally is ever perfectly smooth. There will be pullbacks, corrections, and periods of consolidation along the way as the market finds its balance. The key is to focus on what's truly driving this move: real-world adoption, growing utility, and a shift from pure speculation to genuine use cases. With positive news and tangible shifts in the ecosystem, XRP's climb looks more sustainable than ever, signaling a new chapter for the project and its community. The buzz around XRP ETFs is a game-changer for institutional adoption. ETFs make it easy for anyone to invest in XRP, no wallets, no exchanges, just a brokerage account. Grayscale's interest signals deep conviction, but Franklin Templeton's entry is even bigger, bringing Wall Street credibility. These moves open the door for mainstream investors, retirement accounts, and conservative funds to access XRP. It's a bridge between traditional finance and digital assets. The precedent set by Bitcoin and Ethereum ETFs shows there's massive appetite for regulated crypto products. If an XRP ETF launches, analysts expect significant inflows, potentially rivaling Ethereum's. This could cement XRP's place among the top digital assets. The infrastructure and investor demand are already in place. Now it's a matter of when, not if. Crypto was once the playground of retail investors, passionate, risk-tolerant, and quick to react. Retail drove XRP's early growth, building a resilient community around its payment utility. Now institutions, hedge funds, asset managers, pension funds are entering with a different approach. They move slowly, driven by data, regulation, and long-term strategy. On-chain analysis shows a rise in large transactions and institutional wallet accumulation. Trading volume is shifting to institution-focused platforms, signaling a new market dynamic. Retail and institutions now coexist, but play by different rules. Institutional buying can stabilize prices, but also introduce new volatility. The XRP market is maturing, shaped by both retail passion and institutional precision. As always, do your own research. This is not financial advice. To gauge momentum, look at inflows and market dominance, not just price. Inflows measure new money entering XRP funds, signaling real demand and conviction. XRP is closing the gap with Ethereum as institutions diversify beyond the top two coins. Bitcoin dominance is slipping, often a sign that altcoins like XRP are gaining ground. XRP's own dominance is rising, capturing a larger share of the crypto market. These metrics, strong inflows and growing dominance, suggest a healthy, sustainable trend. They're the dashboard instruments for smart investors, cutting through daily noise. Learning to read these signals is key to understanding where the market is headed. For XRP, the data points to real momentum, not just hype. XRP's story is shifting, from legal battles to institutional adoption and mainstream finance. ETF launches by giants like Grayscale and Franklin Templeton could unlock trillions in capital. The data shows this isn't just hype. Inflows and market share are rising as institutions diversify. XRP's niche in cross-border payments and regulatory clarity make it a top candidate for the next wave of investment. Watch for ETF approvals and new partnerships with major financial institutions. These are the real catalysts. Monitor on-chain data for signs of smart money moving in. The journey is just beginning, but the momentum is real. Crypto Insider will keep you updated with data-driven insights as this story unfolds. Stay curious, stay informed, and keep asking the right questions.